Welcome to CAM Radio, an ahead of the curve initiative by Cyril Amarchand Mangaldas, bringing you every Friday the latest in legal and policy. Stay tuned, enjoy listening.
We were struggling to ensure that everyone had at least a basic bank account. Today, that conversation has moved into saying, how can you offer a suite of financial products even at the lowest end of income?
Having a data privacy law, considering the theme that we're talking about, is a game changer. I think it is the foundation of a safe financial services industry, because the last thing that you want is unprotected data falling into the wrong hands, and then the entire system comes into disrepair.
I have a very strong belief that we are going to see a manufacturing renaissance in India. And whilst the SME sector certainly needs access to bank financing, the consumer sector needs it, and we talked about the important role that data is going to play in all of that. But let's not forget that we also need a thriving infrastructure and manufacturing financing.
I wonder whether we have enough pools of long-term capital which are adequate for financing the infrastructure needs of Amrital, as we call it, the amount of roads, airports that have to be built. When I compare the Indian regulatory posture compared to several places in the West, I think we've done very well.
Given the relative underpenetration of credit in our country and the relative underpenetration of all financial products in our country, I see a huge growth path, a huge runway for growth for the Indian banks, and I think they should continue to play that role.
Welcome to Cyril Amarchand Mangaldas CAM Radio Clear Cut, Clarity with Class. This podcast minimizes the mayhem and crafts clarity with care and class, befitting the name Clear Cut. This talks about the issues that matter, as well as pertinent legal aspects of it. In this episode, we embark on an expedition into the future, where India's financial landscape is teetering on the edge of massive transformation. Here is a digital tapestry woven with the threads of innovation, where financial services wizards and regulatory architects stand at the intersection of law and finance. So, the canvas of India's financial services is being painted with strokes that are intricate and bold. India is also expected to be the fourth largest private wealth market globally by 2028. What are the kinds of digital transformations that could affect the vast tapestry of India's unbanked population? What are the key learnings from past failures for banks? Should public sector banks be privatized to maximize value for India? And finally, what really is the future of financial services in this new fabric of Indian socio-economic equilibrium? What story, after all, would India's future financial services tell? To explore this all, here is expert banker Kalpana Morparia and CAM's very own managing partner Cyril Shroff and CAM partner Richa Roy.
Good afternoon, Mrs. Morparia and Mr. Shroff. We have just the ideal panel to talk about the future of finance. It's undergoing seismic shifts, and you're best placed to talk about what the future is going to look like as it's getting upended by technology, by sustainability considerations, as well as more traditional concerns such as risk, which have changed because of recent developments. Why don't we start with talking about digitalization, which has seen both push and pull factors, including things like digital public infrastructure, as well as being necessitated by COVID. What do you think the role of traditional incumbent banks in India's financial landscape will be? And how will they work with these emerging technologies? Mrs. Morparia, would you like to start?
Actually, I believe that digital, particularly the public infrastructure that India has created, has been a phenomenal game changer for financial services. whilst it has touched every aspect of everyday life of every citizen in India, I think it has had the most dramatic impact on financial services. And the reason why I say it is such a dramatic impact, because not only has it covered a very wide population, but it has deepened the overall penetration of financial services in India. If you recall, some years ago, we were struggling to ensure that everyone had at least a basic bank account. Today, that conversation has moved into saying, how can you offer a suite of financial products, even at the lowest end of income? So, at the broadest segment of the pyramid. And I think it's had one of the most dramatic impacts that I've ever seen, certainly in my lifetime, which, as you know, is close to 46 years in the financial services industry.
So thank you for that, Kalpana. And if I can just add a few thoughts. Firstly, in the same note, I think we are not just on the cusp of digital transformation, but actually we are in the midst of it. And the policy philosophy has been that let a 100 flowers or 1,000 flowers bloom. Traditional banks, I think, will undergo digital transformation themselves, and we are seeing that in the likes of both several public and private sector banks. It's all happening at the same time. But eventually, from a regulatory and policy point of view, we will start seeing differentiated forms of licenses as well. The Niti Aayog and I think even the budget speech had talked about digital only bank licenses or models as well. And at some stage, I think that we will see that as well. So it's the direction of travel, I think, is clear. Also, there is a very high level now of digital literacy. So, I mean, the financial sector and whether it's the banking system or the other parts of the financial system are critical in solving India's problem, both for inclusion, access to capital, and for growth. So, in the same note as you mentioned, I think we are in the midst of a true revolution.
Just staying a little bit more on the digital theme, Cyril, I feel that in India, the traditional banks, and a lot of credit really to the state-owned banks, on how well they've migrated to the new technology tools available to them. In some ways, India was lucky because we could leapfrog over a lot of technologies. We never had to deal with the devil of the mainframes. We very quickly moved to distributed microsystems and servers. And now with the public digital infrastructure that's there, I believe that the incumbents will have to very rapidly create front ends which are extremely user-friendly, because fintechs can only play a limited role. Yes. As you know, banking is a highly, highly regulated industry, and Reserve Bank of India is going to be extremely careful and prudent, and to my mind, rightly so, when it comes to awarding new banking licenses. And therefore, I think the incumbent banks can actually forge very good partnerships with fintechs where they bring in a great user interface, can leapfrog faster than some of the monoliths can. But these guys have the database, they understand the regulation, they understand how to provide a suite of products. So I think it's a win-win for both, rather than saying one is going to cannibalize the other.
Absolutely.
Yes, very valuable. And maybe just staying with the digital theme for a minute more, I think the digital finance transformation is enabled largely by data. India has just seen a historic new data law. So I think it may be useful to also talk about how that is going to impact the financial sector, as well as talk about some of the other themes in terms of digital payments and how that has ensured ubiquity of access.
So, Cyril, I'd like to really talk on the data, and really I'd appreciate your thoughts in terms of, the privacy issues around that, given your legal background. So I think we are so blessed today because of the mounds of data that's available in the system. if I cut back to 25 years ago when ICICI started its consumer banking business, we literally had to go to an individual's home to figure out that he lived where he claimed he lived. He worked where he claimed he worked. We had to get reams of bank statements to figure out whether he had the wherewithal to actually service a loan that he was seeking from us. And then with the advent of Civil and several other rating agencies coming in, and the whole lot of data that's available today, subject, of course, to the customer's consent, that today it's literally possible for us to pre-screen all of these individuals and proactively offer them a loan exactly at the checkpoint when they are going somewhere to buy a thing, or they are on the net and then to buy something on Amazon or on Flipkart, and right away we can say, here's your EMI, here's, because you've already credit scored all of these guys. So I think this has opened up a myriad opportunities really for consumer credit penetration in India, which even now, which all the growth that you've seen, is still quite low in India.
No, absolutely. And I think, we're just literally, we have a 2-week-old data privacy law. So we were kind of latecomers to the party on personal data protection. But I think whilst we were latecomers, I think we have done well. Initially, we flirted with the GDPR model, but quickly realized that there were big disconnects between trying to apply that model in the Indian environment. But the fact is that after 5 or 6 years of attempts to bring in a data privacy regime, we finally have one. It was navigated super fast through both houses of parliament and has received presidential assent as well. Now, having a data privacy law, considering the theme that we're talking about, is a game changer. I think it is the foundation of a safe financial services industry, because the last thing that you want is unprotected data falling into the wrong hands, and then the entire system comes into disrepute. So it is, I think, the very foundation of a digital data-based financial system, and now we have it. It's going to take a few years to see how the law on this evolves, but I think we have a very good starting point, and I think there is enough public consciousness about it in terms of privacy of the data that is received. So India does over 1 billion transactions a day across, whether it's payments or banking transactions, and it's mind-boggling the amount of data that passes through the system. And without a legislative protection like the kind that we have now achieved, it would be very difficult for public faith to develop. So we've taken one of the most important steps in protecting the customer in now having this data privacy regime. It's going to be a fairly new paradigm in terms of how financial sector providers, whether it's banks or fintechs or insurance companies, or going beyond even consumer tech companies as well, are going to deal with this new paradigm. But it was almost a prerequisite. You mentioned a few minutes back in terms of the digital public infrastructure that has given India a leg up in terms of creating the basic wherewithal required for where we are today. And now on top of it, having added the data privacy regime, I think we now have the picture is getting complete.
We'll come back to technology in a minute, just to shift course slightly to the capital and the books of the banks. And NPAs are now at historic lows, and in single digits after going through a lot of trouble quite recently. Do you think that these low NPAs are a sound foundation for banking in India to grow and develop? And what are some of the things that we need to be wary of? Particularly what some of the new sources of risk might be, given what's happened in the financial sector in the US, SVB followed by a string of banks, as well as Credit Suisse in Europe.
I think we are at a historic low on NPLs in the banking system, which is certainly a great place to be in. That with relative underpenetration of credit across customer segments, I think bodes very well for a high growth in the credit environment in India. One of the key learnings, I think, over the last 30 years, I would say, ever since India liberalized its economy, is that taking on concentration, greenfield project risk has to be very, very carefully assessed. Gone are the days when we were a protected economy and you got an industrial license and therefore you were protected on all sides in terms of even if your product or service was shoddy, you could still sell it. Today we are competing in the global village, and it's absolutely critical to ensure that plants are at scale, that there's the right technology, and more important, that all of the various supplies and long-term contracts are fully embedded and in place, and the financial closure has fully happened. Because you can't say there's going to be a shortfall and the great promoter group is somehow going to manage to bring in that fund. Those days are just gone. So a very, very careful, structured project finance approach is what is required. And I do believe that the large banks in India have got a lot of experience, have learned a lot from some of the failures in the past. And therefore, I do believe that they should not be shy of actually financing India's large-scale manufacturing capacity that's going to grow. I have a very strong belief that we are going to see a manufacturing renaissance in India. And whilst the SME sector certainly needs access to bank financing, the consumer sector needs it. And we talked about the important role that data is going to play in all of that. But let's not forget that we also need a thriving infrastructure and manufacturing financing, primarily to be led by the banks until the project goes into commercial production, whereafter the insurance companies, the pension companies, and the debt markets can kind of take over from there.
So multiple points, but first, I'd just like to comment on the NPL problem. I think it's been a lot of hard work over the last decade, I would say, and I think things like the Insolvency and Bankruptcy Code have played a very big role in terms of getting us to where we are. And it's amazing how the Indian banking system also lived through COVID and has come out quite strong at the other end of it. So I think well done regulator, well done Indian banking system in terms of the health of the bank balance sheets. But you also raised a very important issue on how are infrastructure projects going to be financed, because part of what the sort of history taught us was that it was always the large infrastructure problems or large corporate loans which were not properly evaluated, which had created a lot of these NPLs. What was on a cheekily called phone banking, where somebody had to make a phone and then you got a loan. Now all that is over. I think in the realm, though I think it is still work in progress, of true project finance, where the fundamentals of the project, the strength of the contract, the strength of the counterparties are all properly evaluated before the money leaves the door and there's a proper financial closure. But I still wonder and I still worry about where the sources of capital are. There are, of course, multilateral agencies. I think there are new institutions like NAPFID and NIIF, which are available as well. But I wonder whether we have enough pools of long-term capital which are adequate for financing the infrastructure needs of Amrital, as we call it, the amount of roads, airports that have to be built. So I think there's a question mark over there. You did mention about the public bond markets. I think they are work in progress, but that has to be the final answer, where it is the bond markets and the pension funds and the long-term institutions which provide that 35-year capital for financing India's infrastructure. And in the meantime, I think the private sector will have to pick up the load.
And I think, Cyril, this can be actually a way by which you literally break up that financing into two parts. In the construction phase, where let's say 3-5 year horizon, the banks and the multilateral agencies will certainly have the capability of assuming the risk on that. And the 3-5 year kind of a duration is something that the banks can manage. Once that construction phase is over, then largely the risk of the project has got significantly minimized. And then through appropriate trust and retention accounts, etc., you then actually hive off that loan in the form of a bond for the insurance companies and the pension companies. So this is a hybrid model. As you know, the NHAI has been pretty successful in terms of securitizing some of their toll road projects. And I believe that's the way to go forward. But I do want to pick on the other point you made in the context of SVB, more relevant to SVB than even Credit Suisse. You see, banks were under this mistaken impression that if you've invested your excess deposits in government bonds, you've addressed the risk, because that's a sovereign risk and therefore you don't really need to worry about the risk. What was completely missed out in that equation is to say these government bonds are subject to a mark-to-market risk, which is dependent on interest rates. So as interest rates spiked, the value of those holdings, which were at lower interest-bearing securities, dropped dramatically. And when you had a sudden pull-out of deposits, obviously that led to losses in the bank book. The other key lesson out of the SVB, to my mind, is the rapidity with which, in the digital and hyper-connected world, deposits can get withdrawn. If you remember, in the earlier times when there was a bank run, you would typically shut the bank at 5 p.m. in this thing and hope Monday morning you would have sufficiently liquidity lines so that if someone queued up at the bank branch or even at the ATM, you could handle it. Today, it's 24/7 banking. With a few clicks on my keyboard or my thumbs on my phone, I'm moving money across. And in this hyper-connected social world, word travels super fast across the globe. And therefore, this combination of ignoring the inherent market risk and ignoring the hyper velocity of loss of deposit is what caused the collapse of SVB. And I think every bank on the globe needs to do a full analysis of its depositors and figure out what happens in a stress scenario.
That's really valuable.
Absolutely. And I think the SVB episode also underscored the importance of trust, because the entire the biggest learning from that episode was that trust in a hyper-connected world can evaporate in a matter of minutes. And that is exactly what happened. It was one weekend and the institution was gone. And no bank or no financial institution will have enough liquidity to withstand a run on the bank when trust is lost. So therefore, I think it also emphasizes the need that trust has to be kept at a high level. And I think that again underscores the need for prudent regulation. And I think India has done well on that front. And in fact, when I compare the Indian regulatory posture compared to several places in the West, I think we've done very well. So I think I would give RBI high marks on. Sometimes they appear to be overly conservative, but they do prevent these kind of extreme mishaps.
No, absolutely. I think regulators were asleep at the wheel, and as they say, they were fighting the last war. That seems to be part of the issue. But in terms of regulators in India, and we, in the response to the previous question, we talked about some of the new age institutions that are financing infrastructure. But I think it might also be useful to think about why there aren't any Indian banks in the global top 100. And whether we want to see more consolidation of Indian banks, is that perhaps a way forward? And perhaps are there any structural regulatory factors that are holding back or stunting the growth of Indian banks?
I thought now with the HDFC and HDFC Bank merger, they are actually in the top 10. And even if you look at the market caps of ICICI Bank and then State Bank of India, they would be in the top 20 or 25. I've not looked at the last market cap rankings. I think Indian banks have very wisely stayed within the shores of India and just created outposts across the globe, primarily to service their clients' needs outside of India and to assist MNCs when they come into India. Just given the relative underpenetration of credit in our country and the relative underpenetration of all financial products in our country, I see a huge growth path, a huge runway for growth for the Indian banks. And I think they should continue to play that role. We can talk a bit more about ESG if time permits, but that's one area that I think the Indian banks have neglected.
No, Kalpana, valid points on the fact that Indian banks and particularly private sector banks are creeping into the sort of global list. But I think still a valid point that India needs more banks, given the population size of 1.4 billion and the economic agenda that we have. I think compared to our needs, we are underbanked. So I think there is a massive opportunity, I believe, for consolidation that lies ahead in the. But it's a combination of a little bit of our policy mindset and ancient regulation, which I think needs a more modern approach to just making these mergers and consolidation more feasible. But that's a very big topic. I would just leave it as I think India needs more consolidation.
We will do this in another session, Cyril, because I have different views on this. I think partnerships with fintechs is a way to go, but we'll leave that for another discussion.
Absolutely.
And staying with that theme for a minute, privatization of PSBs was announced a couple of years ago, and we're likely to see more on that in perhaps next year post-May. What do you think some of the considerations should be to privatize the PSBs to maximize value as well as sort of ensure stability of the financial sector?
I think except for maybe leaving one, to my mind, just one is good enough. But if they feel strongly, leave two under government ownership. But all others should definitely be privatized. And the concerns about someone cornering this and, related party lending and all of that is actually buried completely, because the Reserve Bank of India insists that anyone buying more than 5% need to get not only an endorsement from the board, but also the approval of Reserve Bank of India. So there are enough checks and balances to ensure that there is not concentration into one individual shareholder who then might misuse the banking license.
Great. So since you brought up ESG, I think we must probe you about it. The RBI has been issuing a range of regulations, for green deposits. They're going to bring out something on prudential regulation and climate risk and resilience. Is sustainable finance going to be an important mainstream product or service that will be provided by banks? And how will bank capital be impacted by climate risk, and how can it be insulated?
So first and foremost, I think climate risk is a key risk that the banks need to address. The current approach of the Indian banking system appears to be disclosures in terms of what their ESG is. How much power am I utilizing in my branches, water, the social goals, purely for themselves. They are not looking at it from a client perspective. And since climate risk is a risk that's going to impact each and every one of us at an individual level, and certainly the bank's own balance sheets, there has to be a much, much more greater awareness and action by banks in terms of financing. How do they migrate their clients into more ESG compliant matrices. And it's not just the financed by them, but what is actually even facilitated by them. The only banking group that I think has embraced this in a big way are the European banks, maybe followed by some of the US banks. In US, as you know, there is a huge divide within the country as to whether you should continue to finance fossil fuels or not. But Indian banking system, according to me, has not even awakened to this requirement. So I feel this is a crime.
No, I absolutely agree with you. I think ESG is and will be one of the defining. It's an existential issue for our species, and I would also agree with you that it's a theme that is at a very nascent stage of development in India. Though increasingly we are finding more and more conversations about green finance. And personally, I believe that unless the financial industry gets involved, nothing will happen because it provides actual incentives and disincentives and a framework for private enterprise to fall in line. Without the financial system dealing with it, nothing will happen. That's where the rubber hits the road. So last.
Very well said, Cyril.
Yeah.
So we started with technology. Let's end with technology as well. The use of AI in finance is becoming more and more commonplace. This comes with several benefits as well as risks. How do you think that's impacting the delivery of financial services, and how should it be approached from a regulatory and risk standpoint?
So I would address that first at a risk point. All of us are aware of the huge benefits of AI and ML. We are all aware of the huge benefits of generative AI. I think we need to first focus. This is one of those cases where you first need to build the guardrails and then leash your animal spirits in terms of what you need to do there. So cyber risk and all of the risk associated with what's going rogue, your AI system getting tampered by, even insider threats. So this is definitely a place, again, a conversation for another day as to how we really need to build these guardrails.
No, I agree with that. I think AI is going to be one of the defining themes of the future. I don't think any of us understand it enough to sort of authoritatively comment on it. But I do think that there is a need for a regulation. But there is a very big discussion in terms of what kind of regulation does AI need? Who are you going to regulate and how are you going to regulate? But the financial services industry certainly is going to be a big user of AI. And I think it is going to also require regulation both from the technology side as well as from the financial industry side. So that is where I would leave it. And as you say, conversation for another day. We are living in very interesting times. That's all I can say. That, and where we are seeing some of these themes emerge in front of our eyes. I mean, 8 months ago or 9 months ago, nobody had heard of ChatGPT, and now it's on everybody's lips.
And so, as we bring Cam Radio's exploration of the future of financial services in India to a close, it is a reminder of how tradition is meeting innovation and opportunity is intersecting with challenges in India's dynamic landscape of finance. There is an intricate web of digital and financial disruption and regulatory dynamics that may continue to define India's growing financial services landscape. India's financial future is not just about adapting to change, it is about steering it with intelligence and foresight. As financial inclusion becomes not just a goal, but a driving force, both traditional financial institutions and fintech startups could continue to bridge gaps and reach the furthest corners of India with tailored solutions. And as we cast our gaze into the future, maybe even AI can unfold tantalizing possibilities for India. And so the future of financial services in India could be a canvas for everyone, from Indian banks to fintechs to customers, to leave an indelible mark. Thank you for embarking on this exploration with us, for engaging with the depth of ideas and aspirations for India's Amrit Kal. Thank you for listening to Cam Radio.